Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look again on the gold market. So although the recent events that we've got in the last week was really dramatic for financial markets, it was not for gold, because for gold, all this negative stuff that we've got, this poor statistics, turmoil around Donald Trump impeachment, the new round of the United States and the China tariff spiking, so all this stuff was supportive for gold. And the gold has got the new inspiration and showing truly significant upward action that we see right now on a daily chart actually. But the most tricky situation stands on the weekly chart, because everybody probably remember that just a couple of weeks ago we talked about the possible double repo sale pattern and the possible upward action to complete the final XOP target on the weekly chart, and we've got also the bearish grabber that was actually successfully destroyed by the gold market with this recent drop. But the tricky moment stands so that even with these new lows that had been formed in the beginning of the week, gold still keep chances for a double repo sell on the weekly chart. And taking into consideration the new background, the new driving factors that we've got recently, I mean, poor statistics. Right now we have another rate cut on the horizon by the end of October. The dead point of the Brexit is also coming, and that is new factors that provide some inspiration to the gold. And despite that market has erased our initial setup that we talked about on the weekly chart with this grabber, despite that it was really very good actually, it was a kinetic setup, but the new driving factors in the recent price action on the gold tells that the idea with the double repo on the weekly has not been destroyed totally. At the same time, guys, this is really very valuable lesson to us, that despite how really perfect the overall technical picture could look like, it doesn't mean that it will show the performance, it will start to work in the manner how you expect it. And that is what we see right now on gold. The patterns that we have counted on, I mean, the grabber has been erased, but at the same time, the setup of the double repo is still valid. So this is really very tricky action. And currently, the contradiction between the different time frames is also exist. So while we have the bullish fundamental background and chances on upward continuation on the weekly chart, take a look what we have on the daily. On the daily, market has formed actually the grabber, bearish grabber here, right at the major resistance, and which actually theoretically suggests the taking out of those lows and downward continuation. It doesn't match really to overall sentiment on the market, but we have this pattern, and this pattern is bearish, and we should take it into consideration. We can't ignore it. In general, our task is to catch the correct direction as soon as possible. So we should be very careful to the signs and patterns that the market will provide us on the coming week. Speaking on the setup that we have here, actual market has completed the initial upward leg that we trade on the last week, because market has completed our XOP target on this upward action, and the initial leg up is done right now. At the same time, if we treat this Gartley triple to, if we take a look at the consideration this Gartley triple to buy pattern, market also has completed the minimal target. So you can see even 618 retracement has been done of this downward action. And now the major question is what this action is. Whether it's just a retracement of this starting new significant downward action, and market will continue to move lower, or that is not a retracement and we're coming to the new top according to the setup that we have on the weekly chart? An answer we should get very soon. It depends on how market will respond to this area. In 2 words speaking, the breakout of this area, erasing of the grabber, will tell us that we are coming to the 1566 area and creating the new top with our double repo pattern and hitting of the weekly XOP. If market will start reaction here, well, it could lead either to the deeper retracement or maybe it will be even downward continuation. So all this depend on this level. So that is the cornerstone of our current view on the gold market. If we will be correct in our view that indeed could be upward continuation because we have some reasons to suggest this, we will get the pattern that will lead market to the double repo top, the second top, and complete this weekly XOP. And this pattern you could see on the 4-hour time frame chart. That could be reversed and shoulders patterns right on top. If we will be correct in this case, market will complete some kind of the ABC reaction. That will be right at the 1566, and that will be precisely the second top of the double repo pattern and the weekly XOP. It's approximately. But on this leg to the upside, the price action could be different. For example, it could be a straightforward action right to the COP of the pattern that we have here, ABC bottom. This market could reestablish upward action immediately on Monday, or maybe market will show a deeper retracement here, and we will get kind of the AB equals CD pattern right to the COP. So this leg could be different. But the major level that we should consider right now is 1520. As soon as market will break it, you raise the bearish grabber on the daily. That will be very important to us. Correspondingly, depending on your view on the market, you will have absolutely different approaches for the trading. For example, if you have the bearish view, for you it's a relatively simple setup because it depends totally on the 1520 area and the bearish grabber that we have on the daily chart. That's the major pattern for you. It means that the invalidation point of the bearish setup stands right above the B point. On the hourly chart, we have multiple grabbers that have been formed on Friday, which suggest the drop below these lows, and theoretically that could be deeper downward action. So currently it's difficult to say how deep the downward action will be, whether it will be just minor retracement to one of the support areas, or market indeed will just continue move lower and taking out of these lows. But if you would like to take the short position, this is relatively simple because invalidation point stands right here. Your stop will be somewhere above this area, and this is the only way how it's possible for trading market right now short. How to fit the bullish sentiment right now to the bearish context? This is quite different question, and you will have to answer on it. But by my opinion, the bearish context is a bit weak right now, and you should think twice before taking the short position currently on the gold market. So, but the bearish setup has only one attractive point. It provides very small risk. So taking position somewhere in right here, the stop will be very close. So if this setup will be successful, you will get fast profit with the minimal risk. So if this will be just retracement to the 1480, for example, well, this will be a good trade. But for bulls, there are different ways of trading exist. For example, you could try and take position right now. You could wait for some ABC retracement down and getting regardless triple to buy here, or you could use the stop buy order with the breakout of the 1520 area. So for example, placing the stop buy order here of the breakout, this market was coming to this level. Finally, you could wait where this whole construction will be stands in place, and you could try and take the position somewhere around 1490 if market will start to form the hand and shoulders pattern. Lots of different setups that you could follow if you would like to trade it long. So that is kind of the homework and things to think about. I'm just giving you some hints how you could build your trading plan. Well, I suggest that there's two favorable scenarios exist. The first one is waiting for some deep retracement here. If we will get lucky, for example, market could form kind of the ABCD retracement, forming the Gartley steeple to buy, and that will be relatively safe opportunity to go long, right to this 1530 neckline area. Second scenario that is also seems very favorable is to wait for a whole market will be in place and wait for a bottom of the right arm for taking the position. So that's two most preferable ways how to trade it long, but other scenarios is also possible. Well, that's in two words what we have right now in the gold market. As you can see, situation stands in general very interesting. The fundamental background, sentiment background stands positive, which makes possible appearing of the very interesting pattern on the weekly chart. But here on the daily on intraday charts is something to watch for, especially in the beginning of the week, in particular the direction that the market will choose, whether the hour driving factors will be strong enough to support this upward continuation on the gold market.